So I'm Peter Tapling. I run an independent consultancy helping people at the intersection of fraud, risk, identity, and payments. I also am a board advisory group member at the U.S. Faster Payments Council. How many people in the room are members of the U.S. Faster Payments Council? Uh-oh, all right. Come see me and ask me about the Faster Payments Council. But anyway, with me today are Marianne Miller and Chris Craver. Marianne, why don't you give an introduction?
Yeah, great. It's really good to see everyone here. I'm Marianne Miller. I'm the Vice President of Client Experience at Prove. My background is I've spent a wonderful career globally supporting organizations, either fintechs, banking, and also companies that supply solutions to the industry to fight fraud and cybercrime. And it'll be great to have that discussion with all of you here today.
And I'm Chris Craver. I'm head of digital product at Valley National Bank. We're a 100-year-old bank that happens to be based in Wayne, New Jersey, but I live here in San Francisco, and I lead a team of digital product managers, researchers, and designers. We're responsible for the digital experience that we offer to our customers.
Excellent. And RSA wants me to be sure to tell you it's not their fault. and it's not Valley National Bank's fault or Prove's fault, or, well, I guess it's my fault because I'm an independent. So.
Yeah.
Anyway, yes, you get Chris, Marianne, and Peter unplugged. All right, so we are going to, we talked about the importance, I went backwards and forwards. We said, what's the importance of identity for instant payments? So we're going to start by level setting everybody on what instant payments is. Around the world, how many people have ever opened their banking app and you're looking at all of the transactions and next to one of the transactions it says pending? Yes. How many people felt really good about that experience? The banking rails, X of the modern banking rails, the last banking rail we introduced was the debit card network 40 years ago. 40 years ago, what did the world look like from a technology perspective, right? We did not even have the internet. And so these systems were built around IBM mainframe, batch basis, et cetera, et cetera. Starting with really modern times, the UK in 2007 and 8, they introduced a system they call faster payments. Central banks are terrible at creating names, evidently. But it was the first modern economy, big economy, that had an instant payment rail. The Bank for International Settlements defines an instant payment, or what they call a fast payment, not to be confused with the UK faster payment. The general definition is, it is a payment that clears and settles between financial institutions 24/7 by 365 instantly, right? Now, what does that mean? That little processing indicator on a transaction, you'll never see that again. You will, when you say, hey, I want to make a payment, the money comes out of your bank account, goes from your bank to the central bank, goes from the central bank to the receiving bank, and goes into the receiving bank customer's account. This is the United States. That would be far too easy. And so in the United States, we have a broader definition of faster payments that includes things are just basically faster than they used to be. And so the ACH network, 7 or 8 years ago, introduced the concept of something called a same-day ACH. Traditional ACH, you take payment instructions all day long, you dump them into a bucket, you take the bucket, you hand it to the operator at 5:30 at night, they process it overnight, they take buckets of transactions and hand them to receivers, they process them, they return the buckets, 2 days later, cleared and settled between the financial institutions. Same-day ACH does that exact same process, but if you hit certain windows during the day, it will do the whole process in that day. So in theory, if I drop an ACH transaction targeted for settlement today at Bank of New York Mellon at 11 o'clock in the morning, it will clear my Wells Fargo account by the end of that day. So that is faster than 2 days. And immediate payments are the push-to-card capabilities. So the card companies are at the table at the U.S. Faster Payments Council. They did not want to be left out of the definition. And so push-to-card applications, which you've seen as things like anybody in here process daily pay. So your Uber driver checks out. They want to get paid as they end their shift. A lot of those applications are enabled through push-to-card capability in the debit card network. So to put brands on things, immediate payments are kind of that push-to-card and Zelle. Those are payments that to the senders and receivers look like they're real time, but the banks are going to settle them later on. Same day ACH, which I talked about, same ACH process, but the payment will clear and the money will become available on the same day. And then immediate payments, or instant payments rather, which is RTP, the product by the Clearinghouse, which has been available since 2017, and FedNow, which is coming to market in July of this year. The United States is slow to this game. Around the world, instant payment schemes particularly, there are about 60 countries, 60, that either are fully deployed or in process of releasing an instant payment scheme. In most other countries around the world, might be every other country around the world, these instant payment schemes came to market under a mandate. The central bank or the government said, thou shalt, right? In Brazil, any bank over 500,000 accounts had to join the network and had to make it available to their customers. In the United States, we said, oh, laissez-faire, market-driven, right? And so what that's caused is a little bit of a delay in adoption, particularly for the instant payment schemes. To put a point on that, the Clearinghouse came out with an article in the fall of last year that by 2026, they expect to be doing 2 billion transactions a year. Well, yay, 2 billion is a big number. In Brazil, the Pix system processes 2 billion transactions per month today, right? And so that shows you the difference in adoption of these systems on a you must basis versus waiting for the market to develop capabilities. Okay, so that's the introduction of faster payments. Any questions on that? By the way, I can ask a bunch of questions. My questions are boring. Your questions are good. So anywhere along the way, if you see me going like this, it's because I'm looking for people with their hands up. We like questions in context while you're thinking of them. So please, oh, there we go. We got a question. Yes, and we are recording this, so please step up to the mic. And we have a handheld. So if you're in the back or whatever, just raise your hand and we'll make them run.
So with respect to the laissez-faire approach of the U.S. market, right? Because they always say market. We'll let the market take care of it.
Laissez-faire was my term.
Well, yeah, but it's a popular term since the mid-1800s, mostly applied to politics. But I always have this suspicion that it's the businesses that say let it be market-driven because they have some ulterior motive, just to be sinister about it, that they're like kiting checks used to be illegal, right? You'd write a check and you'd make it so that it floated around for a week and a half before anybody realized there was no money there, or until you got the money in there. Are these the Clearinghouse and the banks maybe doing the same thing, or what was their methodology or their reasoning for making it slow?
Well, I don't think they intentionally decided to make it slow. I call it entrenched economic interest, right? Parties in this ecosystem have an entrenched economic interest. For the financial institutions, they are paying to enable these networks. There is no incentive for them to not drive adoption in the networks. The challenge is the networks, both RTP and FedNow, are bank-to-bank networks, and they rely on the bank to then offer a product. And so you won't see it until a product is offered. To kind of put a contrast on that, early warning, when they launched Zelle, one of the characteristics of Zelle in the operating rules is a specific user interface. You must offer this user interface to your customers. It must look like this. Oh, by the way, we're going to do $250 million of advertising around this user interface, right? And so that drove adoption because there was a product a customer could touch. And so, my prediction, open to comments by the panel here, but my prediction is FedNow is going to come out here in the summer, in July. In a success scenario, they'll have 20 or 30 banks live on FedNow on day one. There's 300 banks live on RTP, 350. So maybe you have 400 banks out of 10,000 that can send and receive instant payments. And oh, by the way, those two systems don't interoperate. So between today and 3 to 5 years from now, you will see two things happen. One is we'll generate some momentum around the flywheel about banks actually getting onto the networks. And the interoperability thing will be addressed. I don't know if the networks will interoperate or if the big banks bankers, banks, corporate credit unions will act as correspondents. But eventually, it will be more ubiquitous. And it will be decades before 10,000 financial institutions are on these systems.
Thank you.
Okay, so now with faster payments, I'm going to pick on my friends at Zelle here, unfortunately. But with faster payments, we say, oh my God, faster payments, all it means is faster fraud. I hate that phrase. Marianne and I fight about this all the time. Faster payments does, first of all, when you have this conversation about fraud, let's put everything into two buckets, right? One bucket is fraud. It's real fraud. Account takeover, somebody surfed your shoulder, got your login credentials, went to the dark web, bought all the information about you, started a bank account in your name. That's fraud, right? The other side is scams. Hey, Robert, I'm going to pick on you now. Now you get to ask a question. Hey, Robert, I know you wanted the white puppy dog. If you send me $1,000 by Zelle right now, I'll guarantee you that you get a white puppy dog. And you send me the $1,000 and nothing, no white puppy dog, right? But the difference between fraud and the scam is he had control of his account, he logged in, and he hit the button that said send, right? Now, in banking, it's bad practice to tell your customer they're stupid, so you can't do that. We have 2 generations of people that we have grown up under zero liability. It ain't my fault. And so how do we begin to deliver the basis of the bargain of an instant payment that the receiver knows can never be pulled back, but at the same time, tell people, look, you're now responsible. This is cash. And the visual I like to put on this is if I go to my Regions Bank ATM and I pull $100 out and I turn the corner with the guy with the shell game and I lose $100, do I get to call the bank and say I want my $100 back? No, I did it. I know I did it. Right? I'm not going to get that $100 back. And so we have to kind of create that mentality. Anyway, so now it's, so we have this intersection of payments where we're going to offer this cool new experience. Why is the experience cool? Is there a hand back there? Did I see a hand? No, okay. Why is this experience cool? Focus on these characteristics. Real-time gross settlement. That's kind of bank geeky, but what it means is between the two financial institutions involved in the payment, their obligations between each other are done. The sender got the money pulled out of their account, the receiver got the money in their account, but between the banks and the central bank, that's cleared and settled. That pending that you see in the ACH transaction, the banks are waiting to settle between themselves. So that's why it goes away. Credit push only. How many people have ever paid a cable bill? Right, yes, of course, you would all raise your hands. But if you go into Biller Direct, so you go into your cable company, give them your bank account number and routing number, they're going to initiate a debit transaction. They're going to initiate a transaction that asks your bank to pull money out of your account and give it to them. There is no concept of a debit transaction in the instant payment rails. It's credit push only. What does that mean? Well, it means if you are going to initiate an instant payment, you have to have money in your account. Question brought up earlier about kiting checks, where I would write a check knowing I didn't have the money in my account, hoping you didn't cash it until maybe I did, maybe I would never. In a credit push transaction, the money is available or the transaction doesn't happen, right? Now, people say, well, wait a minute, I counted on float. Well, that's a money management problem, not a payment system problem, right? If you don't want to make the payment until the 31st, wait until the 31st, right? And when you hit the button, the payment goes. 24/7 by 365. How many people have ever bought a house? Yep, always had to happen between 10 in the morning and 3 in the afternoon on a weekday that wasn't a holiday. Why? Because there needed to be a wire transaction. Traditional bank rails operate on banking days. 24/7 by 365, in theory, I could go buy my Lamborghini. I can't buy a Lamborghini, but I could go buy, Chris could go buy his Lamborghini on a Saturday afternoon, and in theory, pay for the whole thing with money he's got sitting in his checking account at 3 o'clock in the afternoon on a Saturday. Was there a question there? Yeah, could you? Yeah, thank you. Step up to the mic.
So I'm looking at credit push only and wondering how does that work in a subscription model or a recurring payment model differently than it would in a credit and debit model? Because I can't, if I've got a customer who I'm charging on a recurring basis.
Okay, I want to go on record as saying that question was not planted in the audience. But that's a
Good
great
timing,
question.
right?
And in fact, in the U.S. Faster Payments Council, which welcomes all constituents, there is a work group around real-time recurring. So There is, we're not going to go too deep in this. There is a capability being built into both faster payment rails called request for payment. It's a rough analogy to a debit transaction, but essentially the biller, your cable company, could send a request for payment that you get presented with, and if you hit the button that says yes, then an instant payment goes in the other direction. But the payment itself is always credit push. So I'm going to pause there for a minute and see if you have a quizzical look. Yeah, oh, yeah, I'm going to repeat because we're recording, but it's like, okay, well, what happens if somebody pushes the button? How do they get the query, et cetera, et cetera? All valid questions, right? And what it means is the bank receiving the request for payment has to build an interface to present that request for payment to their customer, right? And then they have to, and to your point, they have to have things like reminders and set up a time, and maybe I do it automatically. Anyway, good question. Thank you. All right. 24/7, 365, and irrevocable. Irrevocable is important because, again, let's go back to 2 generations of people grew up thinking, it's not my fault, pick up the phone, call my bank, get my money back. What happened? Well, in the ACH network, 60-day right of rescission, say it wasn't me. Up to 2 years later, you can say it wasn't me and get your money back. In the card network, disputes, returns, all that stuff is built into the rules of the network. In the real-time rails, irrevocable means irrevocable. You will never get the money back. There is a message between the banks that says, can I please get that money back? But the receiving bank doesn't have to even respond to it, let alone give the money back. So focus on those things because those are the things that are really different from the traditional networks. Question?
So is it by definition irrevocable? Because some people argue we can only use instant payment when we have something put in the system that allows me to revoke the payment.
It's irrevocable by rule, right? So the rules of the network are these payments are cleared and settled at the time of the payment, and there's no mechanism in the network to return it. Again, think of cash. If I had $100 and I handed you the $100, it went from being my $100 to being your $100. How do I get it back? I can ask you, hey, could I have my $100 back? You're going to say, no, it's my $100. I'm not going to give it to you back. Or you could say, oh, I was wondering why you gave me that $100. I don't deserve it. Sure, here it is, right? And so we have to create the electronic analogs of that don't exist. Right now, those payments are irrevocable, and now we have to figure out how to get the money back. And we're going to talk a little bit about reimbursement models later on, but hold that thought. Okay, one more thought I wanted to give on this slide. How many people have ever seen the Notcha ACH Rules and Operating Guidelines book? Okay, 2.5, 3 inches thick,
yeah.
right? The TCH operating rules are about 1/4 of an inch thick. What's the difference? The card rules, 3 inches thick. TCH, 1/4 of an inch thick. They have 40 years of experience on what's going to happen, what's going to go right, what's going to go wrong, how do I handle exceptions, who pays for what, things like that. My prediction is over time, we will see the real-time networks. By the way, the Zelle network rules are kind of in the middle, 1.25 inches, growing, right? And so the bottom line is, as these networks are in market and they learn, they get experience, 40 years from now, the FedNow rules will be 2.5 or 3 inches thick. Anyway, so we're not really going to talk more about same-day ACH and push-to-card. The focus around identity, because of the is it irrevocable or irrevocable? Yeah. I'm sticking with irrevocable. Okay, the irrevocability of payments really is only in Zelle and the instant payment schemes. And so we're going to focus on that. If the payment's going to be irrevocable, why, like who made the payment? Like that's where the whole identity thing came in. Who made the payment and why are they making this payment? So it's not only about who you are, but it's about what I call divining intent. Why are you making this payment? To try and protect Robert from trying to buy the white puppy dog. Anyway, when we think about identity, think about the identity life cycle. In the identity life cycle, I have to onboard people. Are you a real person? Synthetic identity, very real problem. In the United States, the Federal Reserve has a synthetic identity mitigation toolkit, worthwhile to understand what that does. Once I believe I really have a carbon-based unit, Now I have to create the digital analogs of that carbon-based unit. How am I going, when every time that person comes back again, how am I going to convince myself that it's really that person, right? And then what's the experience? We can make things really, really secure with a really, really crappy user interface, right? And consumers don't like crappy user interfaces. We want it to all be instant. So with that, I'm going to kick it over to Chris.
Can I want to ask a question on the fly here as
Oh,
well.
you
since
can
we're
ask a
talking
question.
about identity, and ask you about, is this from the perspective of the person initiating the payment? What about the identity from the perspective of the person receiving the payment? How should we think about that?
Yes, so all of this stuff applies on both sides of a transaction. The greatest users of instant payments today are fraudsters. They love instant payments, right? Because that money moves over, I don't have to wait for anything to clear, and I'm out of here. And so in any kind of scam transaction, in the Robert scenario I talked about, buying a white puppy dog, where's the bad guy? The bad guy lives on the receive side of the transaction. So all of this stuff is about, and we're going to talk a little bit more, in fact, you're going to talk a little bit more about mule accounts, which is the whole ability for a bad person, a nefarious actor, to kind of, once I get the money from the mark, how do I then get it out and put it somewhere where I can control it? All right, so we're going to hand it over to you.
Thank you. And just hit this next thing.
Big green goes forward.
Okay, so we're gonna stay on our example of Zelle and P2P. Now, let me just ask a show of hands in the room. How many people have made or received a Zelle transaction? Okay, so what is it, 70, 80% of the room?
Oh, and wait a minute. How many people have sent or received an RTP transaction? Yeah, that's what I thought. So we're not picking on Zelle because Zelle is inherently more dangerous or anything like that than any other instant payment scheme. We're picking on it. I shouldn't say picking on it. We're highlighting it because it is available in the market today, and this is where we're learning about this irrevocability and scam problem. Question?
So in the pantheon of all of these schemes, where does something like PayPal sit?
I'm going to do my real quick P2P 1.0, 2.0. In PayPal, Venmo, Square Cash, Apple Cash, all of those, that's P2P 1.0. You took money out of your bank account and you put it into the ecosystem. It exists on PayPal's balance sheet. Any transactions that happen in there are strictly between you and PayPal. Does fraud happen in PayPal? Absolutely. Does fraud happen in Square Cash? Wow. Absolutely, okay? But that doesn't draw a big headline. What draws a big headline is, oh, the bank stole my money, okay? So they have fraud and risk management, but the difference is in Zelle, it's bank account to bank account, and the service is offered by banks, right? And so it kind of draws the attention. Now in PayPal, because PayPal sees both sides of the transaction, they have the ability to pull money back. If you pick up the phone and say, hey, this guy, I didn't get my puppy dog, they can go look at that other account, and if there's money, pull it back. So it's a closed ecosystem controlled by one economic entity that's not a financial institution versus it is an open network across multiple financial institutions where the sender and receiver might be different in their banks.
And do you see these instant payments kind of cutting into the market for eBay? Because what you cited about how eBay controls it is what gives me more confidence using eBay than any of these, oops, my $100 is gone.
Yeah, so the answer to that question is it's growing, right? Right now, Zelle, there are 1,800 participating financial institutions in the Zelle network. They cooperate under this umbrella of operating rules from early warning. Some very large percentage, 99.9-something% of transactions are the happy path, right? We're talking about basis points, but these basis points are what make the headlines. And so I wouldn't look at it and say, I have PayPal protecting me and the banks aren't protecting me. The banks have fraud risk management, they talk to each other, they have a central entity in early warning that's looking and trying to, give the banks information to make things safe.
Yeah, I don't think I don't think PayPal's protecting me, but they've given me a path to deal more directly with fraud.
So I want you to hold that thought because we're going to talk about reimbursement models in a second, and that's going to be a path.
Okay.
So the intention of this is to show, and I think the show of hands in the audience validated the fact that these instant payments, particularly Zelle is a good example, are growing in the U.S. and at the expense of our friends on checks. Now, that doesn't mean that this is a number of transactions, not necessarily check volume, which we still see pretty strong, but declining. But here you can see, not only are we seeing it on the instant payment rails, but we're also seeing it from a modality standpoint. We're seeing a lot of mobile activity, and that actually is really helpful because we can get a lot more signals from areas like mobile on what is that person's intent, or where did they come from, or do we know this person's identity as they make those transactions. So here just wanted to go through a little bit of an example. Some of you may be familiar with this already. Peter talked about it at the outset. But like, what happens when somebody's an app victim and somebody's approached me, that puppy dog example, where it said, hey, can you send me that $100? We're sending that money to someone else. I think I'm getting, my puppy dog, but in reality, that might actually be part of a more sophisticated scheme. So it's a example where I've been able to draw people in and draw some money out of the account, but I'm handing that to another institution, and I'm asking that person, maybe by one of those job scams online, make a quick $1,000 in a couple of days. Here, I need you to do this transaction for me. Either deposit this action or send this money to this person real quick. And what happens is we see this scaling not just within a financial institution, but across the financial institutions, across the networks, and across the different payment modalities. So, Peter went through the different examples of the types of real-time payments, and then talked a little bit about history of the payment networks that we have here, particularly in the U.S. I can start to see this as a bank in different modalities. So I can see that somebody scammed me on Zelle, and then they've scammed someone on Zelle, and then they've moved that money out via another modality. So they've moved that out via an ACH transaction, right? Same day ACH, or now, as we're talking about things like FedNow, coming to fruition. I would just say, as a bank, and as I look at this, I've got single identities of customers that I know about, but I've now got multiple networks with multiple different rule sets, as you imagined, or as you illustrated on that, Peter, on what we have, that I have to then manage, and because I'm financially responsible, or from a fiduciary and from a regulatory standpoint, responsible for safety and soundness and also protection of my customer accounts. And this is the type of stuff that we're seeing in the industry right now. So, as Peter outlined the different types, so we are seeing, intentional, so you can go on the dark web, you can buy some of these identities, you can sign up for accounts for us, or any financial institution, and it's a wave, and the things that we're doing right now is to put our banks online. So, just within the last 5 or so years, it's been a big wave where anyone in the country can go into a bank account, not just the big 3 or 4 institutions in the US, but now, credit unions, community banks, and others. You can sign up for accounts, and what identity protections do we have behind that that's helping us detect synthetic identities or stolen identities? It's an area we need more investment in, and for sure, and we have to partner with folks to help us understand these things. And I appreciate this last one here. I think my bank's going under. Can you help me? I need to move these funds out real quick. Like, we're seeing those types of things, and some of them are legitimate, and some of them are legitimate requests, and some of them clearly are not. But don't let any crisis go unutilized, I guess, is what the example there is. So, no surprise, right? With volume increase in a payment modality, we're also starting to see fraud and scam claims from our customers increase on this as well too. And so there's some impressive numbers here, and you can see what that looks like. I mean, and we're only, from this particular study, banks are only refunding 10% of scam claims. It goes back to that nice illustration that Peter had. If we're treating this as cash, and this modality is cash, customers have to understand that they have no right or no clawback back to that money, despite how they're calling us, just trying to dispute that transaction, and others. So I think now this seems like doom and gloom.
Go back one second. I do want to do a clarification on that figure number 3 heading up there, where banks failed to reimburse 53% of unauthorized transactions. That's not true. If it's truly unauthorized, I don't know the number, but banks will generally refund that money without question. This particular Senate hearing, they didn't really pay attention to that distinction between fraud and scam, and so they kind of put everything into one bucket.
Yeah. So you can see here the disputes do represent a small amount of the overall volume of transactions. So you can make the argument in either direction. But I think the thing from a bank's perspective that I'm most concerned about, particularly on the digital side, is customers are using this modality is how am I educating my customers and how am I instructing them that the different modalities that you have to make payments, whether it's to other people or whether it's to vendors, I've got bill pay, I've got wire transfers, I've got ACH, bank-to-bank transfers, I've got P2P, I'll have RTP, I'll have FedNow. There's all these different modalities, and as Peter said, we have to create interfaces for them, and we have to create education for our customers, and we need systems that identify people ahead of time, and then also when you're attempting a transaction, should you be attempting this transaction or not? And then post-transaction, I have regulatory requirements that I have to file over certain amounts so that there can be traceability in my anti-money laundering. So this just adds and compounds to the bank's responsibilities from my perspective. And really, it sounds great for the customer, but it creates a lot of additional burden and extra work for us right now. So it's a bit of me here recognizing that I'm at the RSA conference and a call out to all of you in the audience for, we need help, we need solutions, we need things that are going to help us identify what is somebody that's either being taken advantage of, if it's third party, or if it really is, if it's first party fraud that's occurring as well. So I know Mary Ann's going to talk a bit more about putting this into practice.
Thanks, Chris. So just to give you some background, over a decade ago, I worked closely with Peter. I was head of fraud for Lloyds Banking Group in London, and I supported the strategy for the bank to go live with faster payments. So I got to see firsthand lessons learned, and what I want to focus on is part of that lesson learned is that's identity. And I want to talk a little bit about what goes wrong when you don't get identity right. Here's PayPal. This was public news. PayPal had to disclose they have 4.5 million accounts that were fake accounts. So PayPal's not alone, and you can give them credit. Yeah, they disclosed it. It did affect their stock price, and that's had investor concerns. LinkedIn just announced they removed 21 million fake identities off of LinkedIn. If any of you follow Elon on Twitter, we talk about the bot problem, the identity problem there. There's conversations daily on the identity. For those of you who were, many of our businesses were somehow affected, all of us were affected by the pandemic. And at the public and private sector, we have these challenges with identity. We don't know what the exact number is, but some of the numbers are around 200 billion worth of losses of taxpayer dollars that were funds that were supposed to go to much needed businesses and individuals that actually went into bad actors' hands. So identity, getting identity right, and especially getting a digital identity right, is a challenge right now. And if you combine that with what Peter talked about was the expanding use of faster payments and better payments and easier payments, and what Chris says, expanding modalities and how customers are using it, the concerns we have for fraud and scams. Identity is really an area, depending on where your business is, whether you're in financial services or healthcare, whether you're opening up a new dating site, no matter what you're doing out there in the digital world, identity matters. Let me just talk to you a little bit about yourself as a consumer. And this is where it really hits home. So the deputy director of FinCEN made a statement recently, and they looked at banks file something called suspicious activity reports. And that's based on some rules that are set up that the banks have to file. And what the regulator, FinCEN, said, the deputy director got up at a conference last year and said that they saw identity irregularities in over 3 million SARs that were filed. So let me make an example of why that matters. Mary Ann Miller has her name, her social, her date of birth, and her address. Someone uses Mary Ann Miller's information and opens up an account at a bank, at a fintech, anywhere, and then deposits money and money launders. Well, the bank sees that and they say, oh, we have to file a SAR. But it has Mary Ann Miller's name on it. Mary Ann has no idea she has an account at that fintech or at that bank. And then her name gets pushed up into a recording, into a suspicious activity report. Law enforcement has an obligation to act on those, especially when it's some kind of big suspicion. And what happens is that they don't have all the information that they need to make sure that they have an adequate investigation. What we don't have in the US today is the concept of a deposit bureau or fintech bureau. If someone uses my name to open up a credit card account, I can go to the credit bureau, Experian, Equifax, TransUnion, and I can see that trade line open, and I can see that that account's been opened, and I can have that shut down. But that's not the case with DDA accounts, checking accounts. That's not the case with fintech accounts. So bad actors can use your name to deposit checks. I call it framing fraud, is what I call it. They can use it for ACH fraud. They can use it for Zelle fraud. They can use it for scams. They can use it for human crimes. And that's where it gets to the human factor. They can use it for drug trafficking. They can use it to exploit children. It can get very concerning and serious. And this is where our challenges are with identity. So where are we today? We have some banks that have paused actual digital onboarding to actually reevaluate their controls and get better, more modern controls in place. We had a chief risk officer at a recent conference got up, a very reputable bank, top 10 bank, said that 70% of all their new accounts were fraud. That's a big number, 70. In Brazil, they call them orange accounts, where it's squeezing the bank. They actually have a little pet name for when that happens, and they see it. And fraud's got the regulators' attention, so we're going to start to probably see some kind of statements by the regulators in the future around identity and digital identity proofing. And certainly we saw Senate and committee and subcommittee discussions around fraud, especially around scams. So we're in a state right now where it's a challenge for all of us. Some of our businesses are grow, and do the fraud and risk teams have that voice at the table to be able to get the right controls in place. Again, I'm not saying that this is a public and a private sector issue. The refreshing thing is, having led a team and led a strategy, technology strategy and business strategy in the UK to enable faster payments, there are tools out there. There are solutions out there. There's ways that we can get better at digital identity. There's ways we can get better at evaluating whether a faster payment on the sending or receiving side is participating in the fraud. And I talk about it as like the fraud brain. And if any of you are building a way to be able to send payments faster, if any of you are building a way to improve your identity, your authentication, and your fraud, think about it from the standpoint of having a machine learning environment, but also tools and signals that actually provide the right answers to the questions that you need to answer during your customer journey. I know we're running short on time. I would love to talk more about a fraud brain. If anyone wants to talk later, I'm happy to do that. As we, the decision days, this is your last slide, by the way. Yeah.
Basically, the whole faster payments, faster fraud thing, it hasn't, yes, the bad guys are going to try and move money faster, but all of the tools that we have can still be applied. We just have to apply them before we do thumbs up on the payment. The fact that you offer a faster payment to your customer, whether it's a business customer or a consumer, doesn't mean when they ask to make the payment, you have to say yes. You can look at that payment, make a decision, and go from there.
And Peter, that's a really good point. Part of the program, actually I set up a program when I was at Lloyd's Banking Group. Part of the critical part of the program is building what we call interdiction capabilities. So those capabilities are before you put that payment on this, whether you have signals for scams, whether it's first-party fraud, third-party fraud, you want to be able to take those signals and be able to delay that payment, stop that payment, kill the session. There's multiple ways you can interdict in a real-time scenario.
And we were going to have a discussion, but you guys have been great with questions. So we got time for a couple of questions, and then we'll do a quick wrap. Microphone first, and then if you can wander back in the back to the yellow shirt, we have another question. And then we'll try and get all three in.
So related to the point I think you were just making, right? We've got on our cell phones, we've now got the carriers finally popping up a thing that says this might be a spam call or something like that. Is that the kind of vision you see when you go to make an instant payment? it pops up a warning that says the identity at the other end hasn't been fully verified. You're taking a risk by sending this payment.
Yes, and there could be multiple experiences like that. There could be, we would like to talk to you about this payment, or you might have a set of questions. Actually, this happens in the UK, a set of questions to kind of say, do you know the person that you're sending the money to? They might even educate real time about romance scams or scams that affect people. And at the most egregious end, you think you're talking to your bank. You think your bank's instructing you to move money to another account to keep your money safe. And they've spoofed the bank's number, and you're convinced that you're talking to the bank that you've done banking with for the last 10 years that you trust. So there's multiple ways that banks, depending on the payment type and the objective of that fraud type, that the banks can keep their customers safe.
Yeah, and actually knowing the destination account on the other end is like a great future state, but you're beginning to see some of that. They changed the Zelle rules to create something they call confirmation of payee, so that now you see, hey, do you really want to send money to Bob? So I'm going to take a question down here, but we'll be around afterwards. Yes?
Hi, thank you. Ron Hudak with the OCC, a regulator. So my question stems in the impact of the ISO 2022 standard and how that standard will help with security on the payments rails, if you can
Yeah, so
address a little bit of that.
ISO 20022, for those of you who don't know, is the messaging spec on which the instant payment rails ride. X of Zelle. Zelle has a proprietary messaging format. In theory, it provides richer data. I don't know if either of you want to weigh in on that one.
Yeah, as far as the question goes, was it around safer?
Yeah, does it make it safer? Will ISO 20, I'm going to rephrase, will ISO 20022 give more signals that help us address the fraud problem?
So it's a more comprehensive payment rail. You have the request for payment. You have lots of, you can actually attach an invoice on that payment rail. There's many things that you can do on those payment rails, and that, in the send and receive scenario that make it very flexible. So I would say maybe, what Peter said earlier, as the rails begin to be innovated on, because there's a set of services that are available, they just have to be turned on. And as those, different use cases have different needs, like if you're doing same-day payroll or instant payroll, that would have a different set of controls and needs versus maybe a consumer payment. So yeah. I think to your answer, I would say yes, but it depends.
Yeah, we do this all the time. I would say no. There's not enough information in the PAX 08 message to know anything about either the sender or the receiver.
Okay,
now,
I see what you're saying.
ISO 20022 is a very rich message set, but for instance, there's 115 messages in the ISO 20022 payments domain. In order to implement FedNow, you can implement FedNow using only 5 of them, all right? So are there rich messages that might allow you to figure out more about the purpose of the payment and who it is, stuff like that? Yes. It's going to take the development of ecosystems to figure that out.
Right. And you do definitely need the fraud brain and interdiction capabilities and all of those things that are smart around.
All the things that Mary Ann talked about rely on data. And the great thing about ISO 20022 is it gives you structured data. When we talk about AI being supervised or unsupervised, it gives you great supervised AI capabilities because all the data is tagged. And I think we're at time. You're going to give me the hook?
Still have 6 minutes.
Oh.
What's that?
You still have 6 minutes.
All right.
Oh, great.
Use a microphone. Oh. Or step up there, yeah.
Thank you. So at the moment, the banks are the entities who are responsible for identity verification. In the European Union, there's a movement that the government should be the identity provider and the entity who controls if this is really the identity and if the person really authorizes the payment. What do you think?
It's an excellent question. So you think about what the concept of portable identity or federated identity. There's lots of questions. There's different things happening globally. If you took a look at, I think Finland or Sweden just launched something called Bank ID. The banks got together and actually created a way to verify so you could take that verification across different experiences. Chris and I were just talking about this before the session. If if you can imagine, you have your health care with Cigna and you move to Aetna, you have to start all over again, in your identity. Wouldn't it be great if you could take that portable identity and port it over to your new healthcare provider? Or if in a payment ecosystem you had your identity verified, you could take that tokenized identity and move that over to a new experience. It's definitely something that's being worked on. Just like the payment system, it's competitive in the US. Who's going to take the lead on portable identity? I think it's going to come more out of the ecosystems. I think it's going to come out of the private sector. I don't think it's going to come out of government, for example. But there's, we're at the infancy stages of it. Privacy plays a big part in that as well, from the privacy discussion and the how as well. But I do know that, we do have a challenge in the US with identity right now. It's quite significant, and, and there's a lot of innovation going on around it.
Yeah, I would say, we've seen in the past where the government has even proposed a national identity or national ID, and how uniformly rejected that is across the states here. So we know that that's not going to come from the public sector. There has to be a private sector.
Yeah, there's not money. Like in India, they have something called Aadhaar, which is a biometrically driven government-issued identity. And they still have identity problems in payments. All of you who flew here have the Real ID enabled driver's license with the gold star on it. I participated in the initial Real ID conversations 25 years ago, and it was supposed to be essentially a national ID. And the party that railed against it was the ACLU. You can't do that, it's big government, we don't want the government following all of us. And so it's almost going to have to come from the private sector. There is not the political will in the United States to have the United States be the entity that generates those identities.
But maybe just to add on that for a second, though, the irony is that underneath the rails in the banking system, you talked about SARS, anything over $10,000 that I have to send to the government to let them know that this thing happened, is that they do have a beat on what's happening and whom and where, and with things like Real ID and others.
And it was only in the last 4 or 5 years, you guys probably know better than I do, that the Social Security Administration would actually validate a Social Security number, right?
Okay.
We're broken. Question?
Yeah.
So we're talking about fraud, but fraud is, what about the financial institution's responsibility here? They have KYC, know your customer. They have AML, anti-money laundering. Don't we need, and then you're talking about frictionless payments where make it easier to do all this. Don't those kind of conflict? Because you just had, or don't we need to improve KYC laws and AML laws so that you verify that identity and put it on the financial institutions to ensure that they're implementing AML and KYC appropriately?
Yeah, I'll tell you what one of the challenges is. The challenge is the bad actors have Marianne's name, social security number, date of birth, and address. They have it. They have all of my information. The question we have to answer is Marianne Miller presenting Marianne Miller's information in the flow. That's the question, right? Because the KYC tools will do entity resolution. They'll say, yeah, that's Marianne's data. Check, that's Marianne. But they didn't answer the question. Those systems haven't answered the question. Did Marianne present her information? And that's part of the challenge we have with identity proofing, digital identity proofing, which is causing the 4.5, million frauds, fake accounts at Twitter and all of the, the fake accounts that we see across the ecosystem.
And to me, that's just a front door problem. That's just you got in the door, and now you're trying to do transactions. And at that same point in time, if it was Marianne, is it still Marianne that's trying to do this transaction as well too? So one of my complaints here, maybe not necessarily representative of my employer, but there's the concept now of too big to fail. Is there a concept of too small to succeed for institutions that aren't in the top 5 in the United States? And that is, now I have to think about with each new payment modality and with each new option that customers have, how does this stitch into the rest of the systems and the investment that I'm making? What is the provider providing me if I'm plugging into that, or what do I have to build in myself? And it's a significant investment for a proposition that I can't charge my customers for. It's an expectation in the market.
Right.
And you didn't do this on purpose. You were a perfect lead into the wrap-up slide, right? So, what do we do now? What do we do about this? How many of you have within your organization, whether you're a bank, healthcare company, manufacturer, an identity strategy? Yeah, not many hands, a few hands, 30%, 20% maybe.
Yeah.
You should create one. And that identity strategy should not only be internal, but you use a lot of service providers. And so understanding who your service providers are that are supporting your identity management, KYC, et cetera, and how are they vetting their identities. You know, figure out your identity risk management strategy. For payments particularly, move it kind of to the beginning of the process, understanding before I ever get to the point where somebody says, hey, I'd like to make a payment, understanding really who they are. This applies to businesses as well. The #1 fraud complaint last year from the ITRC was business email compromise. That always happens when somebody says, I'm the CEO, we just did a new investment, send $1 million here. How do you know it was a CEO, right? And communicate. This is Mary Ann's bugaboo, break down organizational silos. People have to talk across the organization. The bad guys definitely look across your organization. So we're at time. Final comments. Who wants the last word? Because whoever doesn't want the last word goes first.
Go ahead, Chris. Go ahead.
No, I'm not getting the last word.
Okay.
Go ahead, Chris. 30 seconds. What would you have them do?
Come talk to me if you've got solutions, because I'm interested in it. But the other thing is go back and invest and look, because with each new opportunity that we have, and now we've got things like generative AI and other technologies that we can bring to bear, this is a hard problem. It's multifaceted. What can you all do to help solve it for us?
And my last thoughts are, this is the inability or the lack of putting the right kind of identity controls affects you, it affects your family, it affects the society, it affects all of us. So really, you know, I know sometimes there's lack of investment or lack of strategy, but really think about how it hits home, how it affects our society, how it can affect everyone here in this room. Maybe one more last show of hands. How many know somebody that's been a victim of identity theft or identity, yeah. So as you can see, it's affecting all of us in this room. So the better we can get at it, the better the less hands that'll come up next time.
All right. The last slide is resources. You have these slides available, or take a picture, but these are resources that are available in the market that you can help with. Cooperate with each other. Stronger together, I think, is the theme of the conference. That couldn't be more true than it is in financial services. So please join me in thanking Mary Ann and Chris.
Thank you, Peter.